Hey guys, welcome back to Digital Lifestyle. Hope you all are doing well. Well, as you can see, today I'm going to be discussing the recent report from the Federal Reserve that has sent shockwaves through the financial industry. The report highlights the potential collapse of a major Silicon Valley bank and has sparked concern among investors. In this video, we'll take a closer look at the report, the factors that have led to the bank potential collapse, and what it could mean for the wider financial system. But before I do that, I want to play this video because, this is from ABC News and they're telling it as it is. So let me just.
And after issuing dozens of warnings.
Oops, let's start again.
New details now on the latest banking scare and a revealing pair of reports detailing the shortfalls leading up to the collapse of Silicon Valley Bank. The Federal Reserve saying in part blaming itself for the second biggest bank failure in U.S. history. ABC's Elizabeth Schulze joining us now from Washington with the latest. Elizabeth, good morning.
Wade, good morning. The Federal Reserve here is taking some responsibility for its role in the collapse of Silicon Valley Bank as it signals a push to toughen up some banking regulations. The Federal Reserve is admitting it failed to prevent the collapse of Silicon Valley Bank, the second biggest bank failure in American history that sent shockwaves through the global economy. In a sweeping internal review, the Fed saying it failed to take forceful enough action as SVB grew in size and complexity.
Well, I've got to ask this question. Why did the Federal Reserve not take action? They said they failed to take action. Isn't that not what they're supposed to do? Take action in these kind of situations. Is that not what you guys paid them for? I don't get it. They allowed this to happen in my view. Anyway, right, now that you've got some context about that, let me go into here and get this down. There we go. U.S. banking crisis. Federal body prepares to put First Republic into receivership. Moves comes as Federal Reserve's report admits it's failed to take forceful enough action before Silicon Valley Bank failed. I mean, ridiculous. What's the point in having these people? Anyway, so let's get some background on before we dive into the details of this report. Let's understand the contents. Silicon Valley Bank has been a hub of innovation and entrepreneurship, with some of the world's most valuable tech companies headquartered in the region. However, the rapid growth and success of these companies have also created unique challenges and risks for the financial industry. Many of these companies are heavily reliant on short-term funding, such as venture capital, private equity, to finance their operations and fuel the growth. This creates a complex web of interconnected relationships between the tech companies and the financial industry, with banks playing a critical role in providing financial and other services to these tech companies. The Federal Reserve report released on the 28th warns of a potential collapse of a major Silicon Valley bank that is at risk of failure. According to the report, the bank in question has significant exposure to the tech industry, with a large portion of its loan portfolio consisting of loans to the tech companies. The report also notes that the bank relies heavily on short-term funding, which could be a key factor in the potential collapse. The report does not name the bank in question, but analysts are speculating that it could be one of the several major players in Silicon Valley, including some of the biggest names in tech. Report findings have raised concerns among investors and regulators, who are also closely monitoring the situation. Factors contributing to the potential collapse. So why? What are the factors? The factors have committed to the bank's potential collapse. One of these the key issues that the bank is exposed to tech industry. Well, fine. While the tech sector has been a major driver of economic growth in recent years, it's also highly volatile. I think they're talking about cryptocurrencies here, and unpredictable. Highly volatile and unpredictable. The tech companies could experience rapid growth and success, but they can also face sudden declines and failures. If the bank in question has a significant portion of portfolio tied up in loans to tech companies, it could be vulnerable to losses if these companies experience financial difficulties. Furthermore, if a major tech company were to fail, it could have ripple effects throughout the industry and wider financial system. Another factor contributing to potential collapse is its reliance on short-term funding. While short-term funding can be an effective way to finance operations and fuel growth, it also creates risks for banks. If the bank is unable to secure additional funding when its existing funding sources dry up, it could face liquidity problems and be forced to sell off assets or declare bankruptcy. What are the implications for the wider financial system? If the Silicon Valley Bank were to collapse, it could have serious implications for the wider financial system. The interconnected relationship between the tech industry and the financial industry means that a major bank failure could have ripple effects throughout the whole economy. I think that's globally as well. For example, if the bank were to fail, it could trigger a chain reaction of defaults and losses among other financial institutions that have exposure to the bank. This could lead to a broader financial crisis with a significant impact on the stock market, the housing market, and the broader economy. That's everything. Given the potential risks associated with the major bank failure, regulators are closely monitoring the situation and considering potential actions, either bail-in or bail-out. The Federal Reserve and other regulators may be forced to shore up the bank's finances, such as providing emergency funding or encouraging the other financial institutions to provide additional support. They may also work to minimize the potential of the contagion by closely monitoring other banks and financial institutions that have exposure to Silicon Valley Bank. They're either going to print more money or take it from you or do something of that nature. At the same time, regulators may also take a closer look at the risks associated with the tech industry and the financial industry. They're going to come down hard on crypto with the tech companies. They may also consider implementing stricter regulations or guidelines to help prevent similar situations from occurring. They're going to come down hard on crypto. Investors' response. So, what do the investors want? The investors what has been the response from the investors? Sorry about that. The report has certainly raised concerns among investors, with many predicting that a potential collapse of the bank could trigger a wider financial crisis. I mentioned that before. In the days following the report release, stocks for major tech companies and financial institutions dipped as investors grappled with the potential implication. However, it's important to note that not all investors are taking bearish approach. Some investors see the potential for buying, for a buying opportunity. I'll probably look at it as well. Depends on how cheap they were. Depends on whether they're going to be gobbled up by another bank and whether they'll be worth it or not. So, some investors see the potential for buying, like I said, with stocks for certain companies likely to rebound if the bank in question is able to weather the storm. The recent Federal Reserve report on the potential collapse of a major Silicon bank has sent shockwaves through the financial system. As I said, the report highlights risks, and this is the conclusion. It remains to see what actions, if any, will be taken by regulators and investors in response to the report. However, one thing is clear: the potential collapse of a major Silicon Valley bank has the potential to have far-reaching impacts for the economy and the financial industry as a whole. And as always, I like to I'll be keeping a close eye on this and keep you guys updated. Like, subscribe, whatever. Take care of yourself. Put some money into to gold if you can. Get it out of the banking system because it looks like it's going for a rough ride. Get stocks that look like they may have potential, not financial advice, but you know what you need to do. Get food, water, and all that kind of stuff, because you never know if you're not going to be able to get your money out of the bank. Anyway, you guys, you take care of yourself. Speak to you soon. Later.